All right, welcome. So based on requests by some of you on the previous videos I did, so a lot of person requested that they want to understand how I approach the market, and also based on some requests I got from some of you in the Telegram group, right? So we want to understand how I approach the market. So basically, my approach to the market is pretty simple. So for those of you who have seen my setup, right, you understand that my setup is simple. So what I trade mainly is structure, liquidity, and POI, or structure, liquidity, and key level, depending, right? So in this particular video, right, I'll be walking you through market structure, right? So market structure is very, very important, right? So if you can be able to understand structure, right? Let's say 70% is, let's say 65% of or 60% of the work you need to do as a trader has been solved, right? So structure is very, very important, right? So now before we go deep into structures, right? So let me just explain some things, right? So even though I've explained them in the introductory video, right? So because you be hearing me using them a lot, right? So we have what we call the bulls and we have what we call the bears, right? So bulls are the buyers in the market, while bears are the sellers in the market. So that means a bullish market is a market that there is more of buying activity. So there is more of buying pressure, right? Why a bearish market is a market that there is more of selling activity or there is more of selling pressure, right? Then the next thing I would like to also talk about is what we call swing, right? Swing and trend. This is very, very important. Now, whenever you hear swing, because I'll be using this term a lot in this why explaining structure. So whenever you hear swing, right? So let me just go to the trading view. So I believe you know how to use trading view. So if you still have issues on using trading view, check the intro video I did. So I think part 4 of that video, I explained trading view very well. So whenever we are talking about swing, right, we are talking about the movement of price. Let me increase the size of this guy. Right, we are talking about the movement of price, the temporary movement of price in a certain direction. So that is swing, right? The temporary movement of price in a certain direction. Then whenever we are talking about trend, right, we are talking about the long term or the primary direction of the market. So that is to tell you that, right, combination of various swings gives you trend. So for you to have a trend, a lot of price swings have to be combined. So this is a swing up, this is a swing down, this is a swing up, this is a swing down, this is a swing up, this is a swing down. But now, if you now want to reference all of them, right, we call it trend. But if I just want to maybe reference an arm, right, I'll be calling it swing. I'll be calling it swing. So I believe that is clear because you hear me say it a lot as I'm explaining. Now let's look at the bullish profile, right, or the bullish market, or what we call the uptrend, right? Now for the bullish markets, what constitute them are the tops, sorry, are the bottoms, right? What constitute them are the bottoms. So you identify them by the higher bottoms. So that means for the bullish market, right? Just like what I did here, this is like a bullish structure. These are what we call the bottom. These are what we call the bottom. Let me just, these are the bottom, right? So I prefer to call it bottom, right? So some person call it higher high, higher low, but I prefer to use top and bottom, right? So that I don't confuse myself. So this is the top. Sorry, this is the top. Let me increase the text. This is the bottom. Right, so this is T1, top one, this is top two, this is top three, this is bottom one, this is bottom two, this is bottom three. Now for a bullish market, what constitute them at the bottom? So what this simply means that as long as the bottoms are higher than each other, the market is in an uptrend. So as long as B3 is higher than B2, and as long as B2 is higher than B1, the market is in an uptrend. All right, so the market is fully bullish. So always pay attention to what constitutes the profile whenever you are looking at profile. So that means until the price comes back and break this low, the moment price breaks this bottom, right? The moment price breaks this bottom, then you can now say that there is a change in trend, right? Maybe there is a break in market structure or whatever, depending on how you call it, right? So whenever this happens, you know that you have a BMS. So once that happens, then that means your bias of the market will not change. Your bias of the market will change. So as long as the bottoms are higher than each other, the market is in an uptrend, right? Until maybe if price goes up and comes down, maybe price comes down, take out the last bottom. So once price take out the last bottom, it signals you that the bearish movement might likely start soon, right? So there are some cases that when price, after taking out the last bottom, price might just kiss a POI here. So if you still don't understand POI, I will explain POI in another video, right? So price might just kiss a POI here and go back again, depending. But if price has the intention of going bearish, right? Even this POI, it will just break through this POI, or it will just swing up like this, then come back and break the POI. So it depends on what price want to do, right? So as trader, you should understand that you don't tell price what to do, right? But you follow price, you react, whatever, you just allow price to do its thing, then you react based on what price is doing. So you can't tell price what to do. So that is for the bullish profile. So is identified by the higher bottom. So whenever I'm looking at structures, right, and I'm looking at, okay, maybe I want to know if the market is bullish or bearish. If I'm looking for a bullish structure, my attention will always be at the bottom. So I have no issue, even if the top can as well, maybe you might have scenario maybe where let's say this T3, right? This T3 becomes lower than T2. In such cases, what price is doing is that price is contracting. There is a contraction of price. So that means price is building liquidity. Price is a kind of building up pressure to move, right? And most times when price contracts, right, you are going to see massive expansion. You are going to see massive expansion. Now, still on that, whenever this top, right? Whenever price break this top, you know that price is expanding. So there's an expansion of price. Based on institutional reference point, like I have 4 institutional reference points I look at. I have the order block, I have the FVG, I have the liquid voice, and the whole of that. Right. Then based on institutional interest points, right? The moment price breaks a top, I know that price is expanding. So what do I need to do? I just wait for price to come back to a discount zone, right? Price come back to a discount zone, that is come back to a cheaper price. maybe in this discount zone, I might either be having my order block, my breaker block, or my FVG. So from there, I pick an entry. But before I pick an entry, I need to see liquidity. I need to see liquidity, right? I need to see liquidity. So I will still explain what I mean by liquidity and POI in another video, right? So just keep an eye on the channel. So that is for the bullish profile. Right, so let me quickly show you the bullish profile on the chart before we, right? So this is GBP. Now, personally, right, whenever I'm looking at structures, I like to stay with the higher time frame, right? I like to stay with the higher time frame. So it depends on what works for you. So you need to figure it out what works for you. Now, if I'm looking at GBP, right? So if I should draw the price swing to be able to know the trend, right? So this is my swing movement. Let me just draw it. This is my swing movement, right? Now, based on what I just explained, you see that these are bottoms. You see that all these bottoms, right? All these bottoms are higher than each other. So until at this point, outside this area that I circled, right? Until at this other point, you are going to see that the bottoms has always been higher than each other. So telling you that price is fully bullish, right? So that is since this is 13th January, right? Price GBP right, has been fully bullish. But now see what happens. See what happened this week. Price now broke this low. Price broke this bottom. You see what price did? Price broke this bottom. Remember what constitute the bullish profile, or what constitute the bullish structure at the bottom. You see that price has broken this low, this bottom. So the moment price breaks this bottom, like all the way from here, like all the way from since January 13, I'll be more bullish, right? Looking at structure, considering structure. Now, but the moment I saw that price has broken this low or this bottom, right? My bias of the market changed, right? So I switch my attention from being bullish to being bearish. Now, but I still need to, you see that even though price sold on, because this is 2 hours time frame, maybe if you go to 15 minutes, you are going to see that there was a massive sale on Friday, right? So price has been selling, right? Price sold on Friday. There was a big sale on Friday. This Friday move. So there was a big sale on Friday. But now I'll still, based on my approach to the market, right? And I say some things, right? Even though price had already started selling, right? But I will still pick my sell entry, right? I have an entry I'm looking at here. So I have an entry I'm looking at here. But now this is on the higher time frame. So it depends on what I'm going to see on the lower time frame that will tell me whether if I should start selling. But looking at the structure, right, based on this time frame, right, and based on our understanding of market structure, I should be more interested on selling GBP in the coming week. Maybe if I go to daily time frame, right? If I go to daily time frame, it might not make more sense, right? So time frame differs, right? Now, if you come to daily time frame now, you are going to see that all these things we are seeing on H1, right? All these bullish movements, we are seeing on H1. This is just a pullback. Price is just pulling back, right? So price, price doesn't just move one way straight. So since September, right, GBP have been more of bearish, right? Have been more of bearish. But you know that price won't just start moving straight, right? So it has to move, retrace, sorry. So it has to move, retrace back, move, retrace back, move, retrace back. So now these buys that has been happening on GBP, these buys are just retracement. And what price is that it retrace and enter into the, let me just confirm if it's on the discount zone, right? So price has entered the premium zone, right? So the below the 50% is the discount zone, above the 50% is the premium zone. For those of you who understand premium and discount, but if you don't understand premium and discount, you can let me know. Maybe I might do a video to explain it, right? So now the moment price entered the discount zone, it started selling. Sorry, the moment price entered the premium zone, right, it started selling. So that is to tell you that this pullback move is completed. So price is going back to follow the primary trend, right? It's going back to follow the primary trend, because if we're on this H1, right? If you look at what price is in on H1, you are going to see that this is just a swing, right? Remember, I told you that swing is just a temporary movement of price in a certain direction. While when we now combine swings, we have trend, right? So based on what I'm seeing here on the H1, sorry, on the daily time frame, GBP is fully bearish, right? But since January 13, price has been, right, price has been pulling back after hitting a POI. So maybe if I go to weekly, it might make more sense. Let's see where price started reversing from. Right, so I have another block. I have another block here. Right, so I have another block here. So the moment price hit the other block, price started pulling back. So the whole of this move you are just seeing on the H1, just know that is a pullback move. So that means if you see, depending on your entry pattern or approach to the market, if I see any same move on GBP on Monday, I'm selling with my futures, right? Any same move in the coming week, I'm selling with my futures, right? So that is the bullish profile. Now let's look at the bearish profile. So for the bearish profile, or what we call the downtrend, right? What constitutes them are the tops. So as long as the tops are decreasing, remember for the bullish profile, right? So as long as the bottoms are increasing, the market is in an uptrend, right? But for the bearish profile, as long as, so what constitute them are the tops. So what constitute them are the tops. So as long as the tops are decreasing, the market is in a downtrend. So what do I mean? So as long as the tops, right? As long as the, let me clear this. So as long as the tops are decreasing, let's say, right, it swings up, swing down, swing up, swing down, swing up, swing down, right? So as long as these tops, so these are the tops, right? These are the tops. So like I said, as long as these tops are decreasing, what I mean by decreasing is that if this is T1, this is T2. So as long as T2 is lower than T1, the market is in a downtrend, right? The market is in a downtrend. So the market will continue to be in a downtrend as long as the tops are decreasing until maybe price comes back, right? Takes out this top. So the moment price takes out this top, you now know that there is a change of trend or there is a break in the market structure, right? The structure of the market has been broken. And once the structure of the markets have been broken, so that means all these bearish moves, right, might now turn to bullish moves. So once there is a break of structure, maybe you should not be expectant of price, maybe pulling back to a discount zone and continue a bullish move, right? Continue a bullish move. So here is where you have the break of structure, right? Here is where you have the break of structure. So once there is a break of structure, you should not be at alert to know what price you do next, right? Because sometimes maybe after breaking structure might just kiss a POI and continue the trend it was following, right? And sometimes once it breaks structure, it will just retrace to a POI, either your order block, your FVG, your breaker block, or whichever key level you understand. Once he retraces to that, price will push up again, right? So like I said, if you still don't understand POI, I will still explain POIs, right? Maybe in another video, right? So make sure you click you click notification icon in the channel so that once I release the video, you get notified, right? So after this video of market structure, right, the next video I'll be doing is on liquidity, right? Because my approach, like I said earlier, is structure, liquidity, and POI, or structure, liquidity, and key level. So the next video I'll be dropping will be on liquidity. Then after liquidity, the next video I will drop will not be on POI. So with that, you can now be able to have a better understanding of how I approach the market and possibly how you could as well approach the market, right? So this is now still on GBP/USD, right? Still on the 1 hour time frame. Still on the 1 hour time frame. So looking at this particular movement here, we agreed that this is just a pullback, right? This is just a pullback and this pullback is more of bullish. Now, looking at where price is coming from, we are going to see that. Okay, let me go to H2. Might make more sense. So let's look at where price is coming from. So all the way from here, this is what price I've been doing. So like I said, what constitute the bearish markets are the tops. So as long as the tops are lower than each other, right? So I can either decide to connect this or just this. So as long as the tops are lower than each other, an uptrend. Hello, ma'am. Yes, ma'am. All right, so basically that's about the bullish market structure and the bearish market structure. So this is how I approach the market from the structural perspective, right? Now this is the basic market structure. So we also have the advanced market structure, right? So but for this video, right, I'll be focusing on the basic market structure. Maybe in subsequent video, I might explain the advanced market structure, right? But if you can understand the basic market structure very well, right, just know that 60 or let's say 55% of your problem as a trader has been solved. So structure is very, very important. So you can't, in fact, structure is very, very important. So you can watch this video over and over again until you understand structure. Then if you still feel like there are some things you don't understand based on my explanation so far, you can as well drop in the comment section. Then, or if there are other areas of trading, right, you will still like me to touch on, you can also drop on the comment section, right? Because the way I want to be doing it, I always want to teach based on request, right? So want to teach based on, okay, I know that, okay, somebody doesn't understand, so okay, that is now, I will now explain it more so that you can actually use it in your trading. Right. Also, in terms of market structure, right? So there is another type of structure which is the ranging markets, right? But personally, I don't trade ranging markets unless maybe when I want to scalp, right? So that is the only time I trade ranging market. But for ranging market, you just see price moving within. So it's more of contract accumulation, right? So most times I try to start off ranging market unless maybe if I just want to do a quick scalp, right? So let me see if I can see any ranging markets. Right. Also, like I say, whenever you're looking at structure, hello, ma. It's not online. Yes.